Good morning. Welcome to Bell's Business Broadcasting. My name is Laksh Behl, and today we're going to talk about, as usual, business, finance, economics, business strategy, marketing, and your particular business and how everything that's going on affects you and help you debottleneck yourself, go from where you are to where you want to be. So let's get started with today's big news in the financial world. Today's a pretty big day. US stocks. For the first time, we've had a company in the history of the world. We've had NVIDIA now that has a $5 trillion market cap. $5 trillion. That's just absolutely insane. NVIDIA has surpassed a $5 trillion market cap. And that just blows my mind because we have been in a quantitative tightening era. In fact, NVIDIA is the only stock that has kept up with Bitcoin for over 10 years now, might have actually outperformed Bitcoin over the last 4 or 5 years. And that's the only thing on the market that has gone completely ballistic. And I just have to kick myself because I actually knew about NVIDIA. I loved NVIDIA. I've been buying their graphics cards for 15 years now. I just haven't been buying their stocks. So one of the things that I've just realized, and this is something I learned from CTO Larson. He's great. He has a channel on YouTube where he goes by CTO Larson, right? And he talks about, this was one of his early videos. So he used to talk about how you should be able to invest in stocks when you buy products. So if you buy $5,000 worth of products from a company, try to invest at least $5,000, ideally even $10,000 worth of products of stocks in that company. So I've been buying a lot of graphic cards over the years, and I have bought over $10,000 to $20,000 worth of graphic cards. I did some math between 2008 and 2015 from NVIDIA. And I should have invested, and I could have invested between $8,000 to $10,000, maybe even $20,000 in NVIDIA stock over the same period of time. And that would have given me an insane amount of returns to the tune of several hundreds of thousands of dollars just by buying stocks for the products that you are interested in. So if you're interested in Apple products, buy Apple stocks. If you are interested in Nvidia products, buy Nvidia stocks. And every time you buy a new laptop, let's say you buy a MacBook for $4,000, go ahead and put $5,000 to $10,000 in the stock of the same company, which in this case would be Apple. And this should lead to outsized returns for you because you're already doing the research as a customer, right? When you buy a product, you're already doing the research. And as a customer, you already know whether that product is good or not. So that research should translate into profits for you. So that's the first tip of the day. Research for products is not very different from research for stocks. Stocks research. It's the same thing. Why? Because you're buying the products, you believe in the products, and you would not be buying the products if you did not believe in the products. So your research is valuable because other customers are doing the same research and arriving at the same conclusions as you are, and going to go ahead and buy the same products or similar products as you are. And if you strongly believe in some products, if you've done your research, go ahead and buy the stocks. So that's the first thing. And that's basically the first thing that came to my mind when I thought about Nvidia reaching a $5 trillion market cap earlier today. So let's look at something else that we talked about yesterday. We talked about Federal Reserve cutting rates, which we talked about extensively yesterday. Just to recap, I told you the economic conditions were such that Federal Reserve would have to cut the interest rates. Why? Because we have quantitative tightening and high rates, high unemployment, high prices. And we also talked about how inflation is one of those things that you can really bring back inflation, but you can't really bring back prices. So the consumer prices are pretty high, and the politically correct solution, or the politically convenient solution, at least in the short term, which is what politicians always care about historically, and that's the only pattern you have. You don't have a crystal ball for anything else, but the only pattern you have is them printing money. So that's exactly what's going on over here. As you can see, right here, Federal Reserve is widely expected to cut rates today. Today is a pretty big day, like I said, because markets are expecting a 25 base point rate cut, which is risk on sentiment in equities and could weaken the dollar. Investors watch for signals of future easing from Powell's upcoming press conference. So we're going to have this press conference later today, and I'm going to talk about it in my next stream tomorrow. But we are basically seeing exactly what we expected. Some of the experts predicted that rate cuts are not going to be leading to a soft landing, but I don't think that's sustainable, especially since if you look at Trump and his analysis of Powell, right? He doesn't think Powell's doing a great job. And that's obvious because people are not very happy. Things are looking expensive. People don't have a whole lot of money. Credit is tight. Real estate is in a glut. We talked about all these factors yesterday. Look at yesterday's stream. But essentially, Trump is saying Powell is incompetent, even though Powell's doing whatever he can to curb the rate of inflation, which is what he's expected to do as the chairman of the Federal Reserve. And he's actually Trump. So look at this, right? Speaking to Japanese business leaders during a dinner in Tokyo, Trump said Powell would be out of there in a few months and promised to appoint somebody new. So we are looking at a quarter-point rate cut, but more importantly, I also read somewhere, and this is in line with what I said yesterday, that we are also looking at balance sheet, the federal balance sheet, the wall CL going up over time, over the next few months. Nobody has a crystal ball. I certainly don't. We don't know what's going to happen, but it does look like that's going to play out. So let's look at something else. Now, big tech earnings are in focus, and this is Alphabet, Apple, Meta, Microsoft, Amazon, maybe even Facebook. Well, Facebook is Meta now. They used to call it FANG, but they now just call it Mang or something. Anyway, representing a quarter of S&P 500 value. Let me say that again. The big tech represents a quarter of the top 500 companies in the world. Just 5 or 6 companies. In other words, technology is really driving everything. You look at it from Nvidia and Microsoft having multi-trillion-dollar market caps, 4 trillion for Microsoft, 5 trillion for Nvidia. You look at big tech actually driving SPX to new all-time highs. So SPX is now at $6,908, which is up from yesterday. It's not quite at all-time high, but it's very close to all-time high. And everything else is just going up while we have quantitative tightening. What this means for you is that capital, customer capital, right? Or risk capital is going into tech. So people are still risk averse, which is proved by gold extending its bull rally because there's a lot of uncertainty. So gold is surging again to over $4,000 per ounce, and that's 44% year-on-year gain. But people are hedging against inflation, people are hedging against policy and geopolitical risks, and further upside is still expected. So this is not quite an era of people just spending money and going into a bubble, even though some experts would like you to believe. I don't think that we are in a bubble right now. We are in in a rally right now. This is just people hedging their money, hedging their bets. This is just people being conservative and putting their money in what they believe to be safe assets right now. Gold, even Bitcoin, is considered safe right now. And you can see that because historically, we've never had in the last 10 years such low levels of Bitcoin reserve within centralized exchanges, because we have so many buyers, not enough production of Bitcoin. So we have demand that is taking over supply. And that also means that people are still putting money in Bitcoin, even though they are risk off right now. Markets are risk off right now. Same way that they're putting money in Nvidia and Microsoft and Amazon and Alphabet and Meta, because people are risk off right now. So you have to understand that these assets, Nvidia, Apple, Microsoft, these are no longer considered the fringe assets. They are considered mainstream, of course, right? They make up for, well, how much is that? They make up for a huge percentage of basically the Federal Reserve or SPX. They make up a huge percentage of SPX. And that is because people consider them to be reserve assets, blue chip assets, the same way you would consider SPX itself to be a reserve asset, a blue chip asset for yourself, for your portfolio. And that is not really surprising. France itself, now this is another news that actually goes on to prove my point. France itself is proposing Bitcoin reserves. And French lawmakers have delivered a bold challenge to European monetary policy this week, introducing groundbreaking legislation that would ban the European Central Bank's digital euro. So they're not in line with buying the stablecoin that ECB might issue. And they're establishing France as the world's largest sovereign holder of Bitcoin. Now, this is a lot of positive statements. This is not El Salvador we're talking about. This is France we're talking about. France is trying to become a Bitcoin reserve holder in the world, one of the major reserve holders in the world. And that is yet another piece of evidence that we are not in a risk-on market. It's a risk-off market. And Bitcoin is now considered to be relatively risk-free. And even though people like to say it's very volatile, it went down from 125K to 105K very quickly and then bounced back to 110K. Well, that level of volatility, while in stocks, it's unprecedented. We never accept that kind of volatility, or we would never like to see, investors do not like to see that kind of volatility within stocks. Within Bitcoin, that level of volatility is just basically expected to be a normal Tuesday, right? You have something that goes up 10%, 20%, 30% very rapidly, then falls down 10%, 20%, 30% very rapidly. And that's just normal Tuesday for Bitcoin. So Bitcoin, with all its volatility, is now considered to be a reserve or a value of a store of value. Having said that, while everything is expensive and continues to get more expensive, while Federal Reserve has been trying to tackle inflation and they've brought down the inflation by a certain amount, but inflation, like I said, is a positive number. It always increases the prices of goods. Economists, policymakers, none of them like to see deflation. They hate deflation, which is the only condition in which prices can actually go down. So consumer prices have been going up. And yet, despite of that, Visa earnings beat out estimates on strong consumer spending. Now, this is not strong consumer spending. What's happening is people are forced to spend more on the same things that they always need to buy: gas, groceries, rent, mortgage, whatever, right? People are sorry about that. Can you text him that I'm in the middle of a stream? I apologize. I should have been better prepared. I wasn't. I will be better prepared going forward. So Visa has been making more money, and Visa's estimates have been outperforming what should have been an era of lessened spending. And what's going on is people are forced to spend more money. People are forced to spend more money because they don't have a choice right now. Actually, just excuse me. Let me take care of this for a second. I have to silence the speaker. Should have done that sooner. I did not realize that. Okay, that should take care of that. So people are forced to spend more money on things that they are just forced to buy, like survival items, gas, petroleum, groceries, and stuff like that. And this is why Visa, counterintuitively, even though we have quantitative tightening, people have less spare cash or reserve cash, less discretionary income. They're forced to spend more money than they would like to. And some people are even extending themselves out on credit despite having a job, stable income, which is not able to take care of their expenses because expenses are rising. Remember, everything is getting more expensive. Even though inflation comes down, the prices of consumer goods or literally everything else don't come down. Prices just keep going up. In fact, it's become a meme on X for someone to post how their grocery bills for the exact same items from 2020 or 2019 to 2025 have more than doubled. That's right. In a lot of cases, people are experiencing more than double the amount of spending for the exact same items in their shopping carts, and they have no choice over it because they need to buy those products just to be able to survive, and that's just how it goes. And this is not really surprising that Visa earnings beat estimates on strong consumer spending. It's not yet based on surpluses. It's not yet based on discretionary incomes. It's not yet a gravy train, like I used to say, like I always say. That's coming later, but it's not here now. Okay, switching gears. So I just want to talk about a business strategy that's going to help you going forward into this upcoming quantitative easing session that we are expecting. And here's this Reddit post which talks about this person raising their prices by 25% and they did not lose a single client. Now, this is a small business. I cannot estimate how big this is actually. That would be disingenuous for me to do. But what they're saying is they were terrified. And despite of that, they have been undercharging for 3 years because they thought people would leave and they didn't want their clients leaving, which is something that we always talk about. If you are afraid of your clients leaving, first of all, you are in a very poor frame of mind. You're in a very poor position because you really don't have any control over how the clients behave. You have no control over how the markets behave. You cannot control what people do. You can control what you do. And as a business owner, what you want to do is be able to control prices, right? Now, in something called the Ultimate Business Growth Mind Map, which we are going to talk about in the future, which is something that we sell on our website, which is something that I've been offering for many, many years and has been refined over the decades. It's a mind map of everything that you can do to grow your products and services, or to grow your business, or to scale your business, or to grow your profits, EBITDA, whatever it is that you want to do. All the strategies, tactics, and strategic decisions, pivots that you can make, they're all covered within this one Ultimate Business Growth Mind Map. And this has come from a variety of fields, and not everything might be applicable to everyone, but it has come from a variety of fields. And I talk about it And one of the easiest ways to increase your bottom line is just by increasing your prices. So if your prices go up, well, chances are nothing else changes. The only difference that occurs is your top line and your bottom line. That's it. Your conversion rate does not change. The number of prospects that you convert into customers or clients does not change. Your existing clients don't leave you. If you just increase your prices, there is a huge probability that your profit margins will simply just go up, just like that, overnight. You could try it. It's worth a try. And the other thing I want to talk about is the framework of trial and error. We talk about how we don't have a crystal ball, but how do we determine what's going to happen? Well, experiment, right? Experiments, and I like to think of them as experiments or games, really. Games and experiments help you figure out what's true and what's not. You start with a hypothesis. Okay, maybe one of the hypotheses is, oh, I'm just going to see what happens if I increase my prices. I predict nothing's going to happen. I predict my business is just going to continue to have the same number of clients and customers. We are going to have the same conversion rate on prospects and from prospects to customers or clients. And we are just going to have higher profits and higher top line and higher bottom line. That's your hypothesis. Do you know if it's true? Maybe, maybe not, right? You don't really know if it's true. So what you do is run a controlled experiment. You already know your numbers right now, but what happens if you increase your prices by 25%? Just test that out. Send out an email to all your clients, or maybe a small number of your customers and clients, that the prices are going up by 25% starting next month. See what happens. Do you see a rapid decline in number of people that you are getting, or the number of people who stick to your service if you have a monthly membership program or a monthly continuity program or a monthly retainer or something like that? If the number does not change, then what you've done is, and I'll give you an example of how beautiful this can be. Let's say your selling price is $100, right? And your gross margin or gross profit, which is cost of goods sold, is excluded from this, and then the cost of it's basically cost of servicing that product or service is $50. So you have $50 in margin. Then you have other expenses, which are either fixed or variable. Now your fixed expenses are maybe, I don't know, $20, right? On an average for each of the product that you sell. And your variable expenses in this example, let's say they're just $10, okay? And these are scalable, of course. You want to have more variable expenses and less fixed expenses, but we'll talk about financial strategy some other time. Today we're just talking about what happens, what your net margin right now per product sold is basically $50 less $30, it's $20. Okay, but what happens now? Watch what happens when your selling price goes from $100 to $150 and $125, and we assume nothing else changes. Your gross margin now becomes $75 because your cost of servicing that product or service does not change, right? If your cost of providing that product or service to your clients or customers does not change, it's still $50. So now you get to keep $75. Your fixed costs are still the same. Your variable costs, which include marketing, might go up a little bit, but let's say they're just the same for now, for the sake of an example. And all of a sudden, you're making $45 instead of $20. That's huge. Just by increasing the prices 25%, you have increased your net margin or your bottom line by, well, 125%. I'll say that again. By increasing your profits or your prices by just 25%, you stand to increase your net margin by 125%. And maybe it doesn't play out this way. Maybe you have to spend more money on acquiring a new client now. Instead of spending $10, you're now spending $20, okay? Your cost of acquisition of clients becomes double what it used to be. That's your variable expense, right? Now, instead of making $45, you would be making $35, which is still 75% higher. The delta is 75% compared to the $20 you were making per sale for the same product without changing anything else. So in a lot of cases, you can just increase your prices and just make more money. And that's something that Dan Kennedy extensively talks about, and I extensively talk about, and you'll hear from a lot of people that if you just increase your prices, you end up making a hell of a lot more money just because you increase your prices. So let's go back to that article, quickly read it on Reddit. So he says, I sent an email, kept it simple, prices going up in 30 days. And he waited for angry emails and cancellations from his customers. Got 2 replies. Both said, makes sense. People literally said, makes sense. That's what they said. Instead of saying, oh, we're so angry that you increased your prices after such a long time, they said, makes sense. Apparently, I was the only one who thought my prices were too high. Nobody complained. One person even said I should have done it sooner, which makes sense. I came across this post on Twitter. I should have saved it, bookmarked it. But on X, where someone says, oh, we had 3 options for an agency that we were looking to hire. And the first one was going to charge, agency A was going to charge $16,000 a month. The agency B quoted us $9,000 a month. Agency C quoted us $1,000 a month. Guess which one they trust? 16,000 a month, 9,000 a month, 1,000 a month. Guess which one they went with? You know, if you're like me, it's not a surprise. They went with the $16,000 agency instead of the $1,000 a month, which was considered to be a scam at best or completely incompetent. Okay, so they branded this one as a scam. This one they thought was incompetent. And the agency that they really trusted was the $16,000 a month because, hey, if they can deliver, that's nothing. That's the value proposition you should be after. If your clients and customers saying, if they can deliver, the amount of money they're charging is nothing. Great commerce happens when you have 2 unequal goods of perceived equal values. Let me say that again. Great commerce and transactions and business relationships occur when you have 2 unequal goods or services of perceived equivalent values. So if you're offering something that your clients consider being equivalent in value to, let's say, $10,000 a month or $20,000 a month or $16,000 a month in this case, then and if their perceived value that they receive from that product or service is greater, product or service is greater than $16,000, you've got a great deal. You can sell these products or services to a whole number of clients all day long. It's really not that hard. One of the big reasons why most businesses fail to scale from one level to the next level is because they think, oh, it's going to be easier. Maybe it was harder to get to the first $1 million, and then going from the first $1 million to the next $5 million level or $10 million level or $30 million level is going to be exceptionally easier. In a way it is, but it's really not. You're facing a new set of challenges, not the same challenges you had before. In the beginning, you might have had different challenges. You were probably looking at product market fit. You were probably looking at how to incorporate stuff. You were probably looking at how to get payment processors aligned. You were probably looking at how to systemize some of your operations. That's a different set of challenges. Now you have a new set of challenges, and this is why I keep talking about the one. This is in line with my philosophy of applying 80-20, which is, for me, it's not about, oh, I can cut down 80% of my workload. That's true, but that's just a lame interpretation of it. For me, the interpretation is, what is the disproportionately valuable thing that I can do in my business today? What is the disproportionate amount of value that I can gain? And what are those tiny little hinges that swing the big doors? Jay Abraham said that. He said, tiny little hinges swing the big doors. What are those tiny little hinges that swing the big doors? And yesterday we talked about how you can identify what your big bottleneck is, but basically whatever it is that you're spending most of your time throughout the week that you shouldn't be spending, that seems to be the one thing that you should handle it. Ryan Holiday in his book alluded to this idea, and it's not a business book, but he alluded to this idea. It's called the obstacle is the way. Whatever is keeping you stuck, is the way. Whatever is holding you back, whatever you're dreading doing right now, that's the very thing that you need to do right now. So one of the obstacles that I've been facing is with my suppliers. Like I said yesterday, I have challenges with my suppliers. They're not really sending my stuff to me on time, and it's just a hassle dealing with them. And that seems to be the first thing I should be tackling, and I've already begun tackling it by looking to hire someone who's an expert at logistics. I'm not an expert at logistics. I don't want to be an expert at logistics. I understand how logistics work. I've brought my business to the level where it is at today by handling the logistics myself. But at the end of the day, I want to let someone else take care of it because this is taking too much of my time. So the one thing is going to vary. It's going to vary. When you solve this current problem that you have right now, you're going to have another, the one thing that you're going to need to solve. There are 2 steps to dealing with this one thing, this one bottleneck that you have. Step 1 is identify, and step 2 is solve. Seems simple enough, right? Identify, then solve. How do you identify it? Well, it's about having a fresh pair of eyes in both cases. In both of these cases, the best thing you can do is a fresh pair of eyes or a bunch of that looks like a fish. My drawing is terrible, but basically that's an eye, okay? A fresh pair of eyes and a bunch of eyeballs on it, but not just any eyeballs, relevant eyeballs. People who've had the same problem that you have, people who currently have the same problem, people who've had this problem in the past and successfully solved it, identified and solved it. If you can surround yourself with such people, even if once a week you can talk to them quickly for 5 minutes, you're going to be able to identify your problem and solve your problem very, very quickly. Now, how do you do that? That's not exactly an easy thing to do. That's not exactly an easy thing to approach because all successful people have dozens of requests from other people who are less successful than them, asking them to pick your brains on something. And while it's flattering in the beginning, over time it gets boring and tiring, and they really don't have the time because they also themselves have their own one thing that they're looking to identify and solve to scale to the next level. So you're going to always have that. And there are several ways to do that. You can always try LinkedIn outreach or cold email outreach. There's no guarantee anything will work. There's no guarantee anything ever works. But it's worth a try. You could try it. Someone might actually reach out and say, okay, you could do this. Or in a lot of cases, today we live in 2025, we're approaching 2026. In a lot of cases, people will just post solutions on YouTube or write solutions up in their books. And you can even consult with AI, although you have to worry about hallucination there. But in a lot of cases, it gives you a starting point, and then you're back to the framework of finding hypotheses. Okay, finding hypotheses or forming hypotheses and then setting up experiments and figuring out what happens based on those hypotheses, validate or invalidate those hypotheses, so to speak. So an easy way of going into the next market is just increase your prices, see what happens. But also, we talked about this yesterday. We talked about something known as break-even period on customer acquisition costs. This is the big one, okay? Right now, do you know how much money do you spend to acquire a customer? What's your customer acquisition cost? Do you know this number? Are you happy with this number? Secondly, do you know your break-even period? Do you know these 2 numbers? Are you happy with these 2 numbers? And if not, why not? And what are you doing right now to optimize these 2 numbers? Because if your problem is not that we are constricted by supply, we cannot supply any more customers, we don't have the ability to deal with any more customers, that's a different set of problems. That's an operational set of problems. But if you can handle 2 times, 3 times, 4 times, 5 times as many customers as you have, or even 50%, 20%, 25% more customers than you have and clients that you have, and you'd like to do that, if you have the ability to do that, and you would like to do that, then these are your big obstacles. In a lot of cases, for my clients who have businesses between $1 million to $5 million, maybe up to $10 million in revenues, the biggest problem is lack of systems. They have systems. They truly understand systemization in a lot of cases very deeply, right? They've studied debottlenecking and theory of constraints from Goldratt. They've studied all that. They understand all that. They apply all that. But they have systems except for lead gen and customer acquisition. These are the systems that they need to be working on. And in a lot of cases, that's their main obstacle. That's their one thing that they should be working on. A book I would like to recommend is called Traction, which talks about how to get traction for your business. And it sounds like it's a startup related book, which in a lot of ways it can be, but it's also not, because you are most certainly overlooking several sources of leads and customers that you should be taking advantage of. So I like to think of it as a Parthenon, right? You know, that ancient Greek building with a lot of pillars? It's very stable. It's much more stable than a table or a tripod with just 3 legs, right? Because if one of the legs stumbles, the whole thing falls over. You don't want that. A Parthenon works exceptionally well because of the number of legs it has. And I like to think of each source as a leg. A source of leads is a leg. So multiple sources of leads. So this could be Facebook, right? This one could be Facebook or Meta with Instagram and Facebook. This one could be YouTube. This one could be X. Those are different sources, but they're still clustered because they're all online. What about outreach? Direct mails. So that's another cluster right there. This is one cluster. This is another cluster. Then you have text campaigns to your existing clients, of course, who have granted you permission, right? And by the way, existing clients and emails, right? With permission marketing, people who have given you consent to market to them. Emails and text marketing to those people. That's another great way from your existing clients, especially, to get new business from existing clients. This is what we talk about in terms of increasing the lifetime value. Just sell more to the existing customers and clients you have. You've already spent the money, time, energy, effort to acquire these customers. Why are you not bringing them programs and products and services that they could potentially buy from you? You should be. There's also something to be said about organizational complexity, and this is something that I deal with right now, okay? I am not great at managing people. I'm just not. I'm just good at doing my own thing under my own perceived conveniences, doing things on time. I'm a great worker. I'm a hard worker, but I like to do things my way. I just don't like to micromanage people. And this is something that I find with a lot of my clients as well. They're not great at micromanaging people. Some of them are naturally good at managing people. I'm not. Some of them are not. Most of them are not, especially people who started from nothing and came up to a certain level of success. They are not great at managing other people. In fact, in a lot of cases, they get into these businesses or their own businesses, start their own businesses in the first place because they're not great with managing other people. And hiring or performance evaluation or setting the degree of autonomy. So autonomy versus control, right? How much do you look at what they're doing versus how much you don't, how much you let them be on their own. This is a huge challenge for a lot of us. And for that, you need to bite the bullet and hire the right people, hire managers. And I find there's a lot of friction in many cases because people used to hate their own manager if they ever had a job in the past. And so they refuse to hire new managers or managers for their own businesses. You need to understand you're not there to make friends. You're there to scale your business. You can do either or, okay? You're not there to make friends. You're there to scale your own business. And therefore, you need to hire people who can do the things that you're not able to do, which in a lot of cases is about handling the complexity of organizational structures and having formal organization structures and having formal hiring and performance evaluation and even firing protocols, and basically deciding how much autonomy is right versus how much you need to control the actions and the decisions of the people you hire for specific roles. And if you don't do that, if you're not interested in doing that yourself and you don't find someone else to do that for you, you're going to find whatever gets inspected gets respected. Let me say that again. Whatever gets inspected gets respected. But if you're not inspecting something, people are not going to respect that. You think it should be easy enough to come up with a memo and say, this is our new policy going forward. I just thought about it. I consulted someone about it. I think I'm pretty sold on this policy and I'd like you all to follow it. You would think that that would work, but it doesn't. It doesn't work because you're not inspecting it. You're not interested in inspecting it. And let me share a secret with you. You're not going to be good at most of the things that your business requires you to be. So you just hire other people to do that for you. In this case, we're talking about finding people who can inspect the work that your employees are doing. And these people are known as managers. You need to just bite the bullet and hire some managers. So that's one of the other reasons why businesses find they are unable to scale. Like I told you yesterday, I need to find, and earlier today, I need to find someone to deal with my suppliers. That's my big bottleneck right now. And as someone who's not great at hiring other people, this is sort of a challenge for me. It's an emotional challenge. But Ryan Holiday has already provided us with this very elegant title of his book, The Obstacle is the Way, which basically answers the questions that I might have, any questions or apprehensions that might have about hiring the growth manager, hiring the logistics manager in my case, someone who can deal with the suppliers. I find that hard to do, but I must bite the bullet and I must do it. That's just all there is to it. And this goes on to a lack of structure as well. When you're working for yourself, you can actually do things in your mind. You can do the math in your mind because you understand intricately the needs of your business. You understand intricately what your business requires to grow. And you're able to figure out that this is what I need to do right now. And then we have this psychological projection of basically just assuming our employees also have the same goals as us. They want the business to scale just as fast as we would like the business to scale, which is not true. It's not their business, it's yours. And then we also assume that since we tend to understand as entrepreneurs what it is that we need to focus on right now, what the high priority items are and the low priority items are, and we can categorize every single day, every single hour, what it is that needs to be done that takes care of the most important, most pressing issues right away, that our employees will also be able to replicate that sort of behavior. And that's almost never true. If they were able to, in a lot of cases, they are either just waiting to start their own thing or they would have already started their own thing. The reason why they're employees is because they don't want to accept a certain level of responsibility that comes with being very autonomous. So having a structure, a complex structure that is comprised of a layer of managers in between is actually crucial to being able to ensure that there is a healthy balance between autonomy and also control over what gets done and what takes precedence over the rest of the stuff for every particular employee. And you don't have to take my word. You just look at the biggest companies in the world. Success leaves cues, right? Success always leaves cues. And you look at the biggest companies in the world and what are they doing? Do they have layers of management? Yes, of course. Yes, of course. You want to scale, you got to have structure, you got to have layers of management, you got to have an organizational hierarchy, an organizational tree, so to speak. That's literally the only way to scale for any structure too. Then talent and talent acquisition are always going to be hard, especially as a small business. And remember, any business under $300 million a year in revenue is classified by the US government as being a very small business. So if you're making $10 million a year, you might be on top of the world. You're taking home $3 million a year in net profits, $2 million after profit, whatever, after taxes. And you are thinking to yourself, I'm on top of the world. And it's great for you. Your personal ambition is being met. But if your goal is to scale the business, the first thing you need to understand is you're still in the small business category as far as the US government is concerned, as far as the broader business world is concerned. If you want to go higher, you're going to have to give up some of the practices from before. You're going to have to give up some of the things that you've been doing so far that have even brought you from nowhere to the very respectable level that you are at today. That's just how it goes. So talent acquisition is one of those things. If I'm an extremely talented person and if I can make, let's say, $300,000 a year working for Google or Netflix or for Amazon, would I want to make $250,000 a year working for some small company making $10 million a year? Like, why would I want to do that? What's in it for me? So talent acquisition, especially A players, is always going to be hard. You've heard this over and over again. Just go ahead and hire the A players. Here's the thing. Do these A players want to work for your business? What does your business offer these A players that a much larger organization doesn't already offer? What is it that you're offering them that they wouldn't receive somewhere else? If I'm working the same 40 hours a week for Google or for Alphabet versus working for you, and I'm making the same amount of money, what makes me work for you? Why should I work for you? This is actually a sales question, if you think about it. Isn't it? What's in it for me? The customers are asking the same question, and the A players are also asking the same question. What's in it for me? Why should I work for you? So talent acquisition requires a whole funnel, much like a sales funnel. And there you need, well, pretty much like marketing, you need outreach or other methods of attracting prospects into this funnel, potential people you can hire, then interview, then make offers, and finally people who have a job, and then there's going to be a level that actually sticks for a while. Not everyone is going to be a great fit. Some of them are not going to be a great fit. Some of them are going to be a great fit. But understand that hiring A players is not quite as easy as just hire A players, bro. It's hard because A players simply just don't want to work for just about any business out there. Why would they want to work for a small business that really offers no perceived advantages over anything else? Now, if they're desperate for a job, that might work, but do you want to build your company around people who are desperate for a job? Not really, right? So you need to start asking yourself how your talent acquisition funnel is going to work and what it is that you offer to them that other people cannot offer to them. You need to start asking this question. It's a non-negotiable if you want to scale. And today we're just really talking about the challenges that you're going to have, but eventually we're going to talk about the solutions as well. But one of the solutions that you have to have in case of all sales questions is two things. First, how am I feeding volume to this funnel? Okay. Now, whether that's sales, whether that's something else, whether that's customer acquisition or talent acquisition, whatever it is, how am I feeding volume to the top of the funnel? This is your funnel. All sale questions or all sales situations have funnels. How do I feed volume to the top of this funnel? That's the first question. The second question is, what's in it for me? Why should someone care? This is the question every one of these individuals that you're feeding to the top of your funnel has for you. Why should I care at all? What's in it for me? What is it that you're offering that no one else is offering? And if you can answer these two questions, volume and what's in it for me, you're going to find the technical implementation is just a matter of figuring out the how-tos. You can watch a bunch of YouTube videos. You can just go read some documentation. It's easy to do. Running ads isn't hard. What to say in those ads is the hard part. Marketing is basically three things, right? It's the market, which basically is who, right? And then this is the message. This is the most important part. What you're saying to them and why they should care, right? This is two questions. And then there's the media. How do you reach them? This is the triangle of marketing as emphasized or brought forth by Dan Kennedy. Market, message, and media. The most important one out of all three is this. Message. What are you saying to them? Why should they care? What's in it for me? The how is very simple. Media buying is very simple, whether you want to do it online, offline, however you want to do it. It's very simple. Getting a message across in front of thousands of people, millions of people, hundreds of millions of people isn't hard. You just need some money for it. If you can do it profitably, you have all the money in the world. The question is, what do you say to them? Why should they care? And that goes for all sales, all acquisitions, whether it's business acquisition or talent acquisition. If you're trying to acquire another company, you're going to have to answer that question in terms of why should they listen to you? Why should they pay you any attention? Why should they do what it is that you want them to do? If you're talking to just prospects, trying to sell them a product or trying to get them to subscribe to something, why should they care? What's in it for me? And I'll give you something that you already probably know. They don't care about your product. Your product is irrelevant, even if it's great. Your service matters not. Things that matter not. These are things that matter not. What matters is the outcome. Are you selling great, big, giant homes? Well, okay, people don't really care about homes. They care about their experience of living in that home from day to day. What you should be selling is, and what you should be focusing on while answering this question of what's in it for me, while crafting your message, is why your home or your product, the product that you're selling to them, while living in that home is going to be a great experience from them on a day-to-day basis. And you know what? Show, don't tell. That's your best marketing. Show, don't tell. This is why video works exceptionally well. You're just showing them a demonstration of what it could be like if they were to talk to you, or if they were to use your product or service, or if you're a consultant. This is exceptionally great because now they're getting an experience of what it would be like to talk to you, or what it would be like to deal with you, and how you would be able to solve their problems. They're not interested in your consultation. They're interested in solving their problems. They're not interested in your product. They're interested in what that product means for them, for their lifestyle. They're not interested in buying that hammer or the nail. They're interested in the hole in the wall, as someone would say. I don't know who said that, but that's a great quote. It's always stuck to me. So why should they care about your product? They shouldn't. They really just only care about their outcomes. Why should someone who is an A player care about your business? They don't. They never will. You know what they care about? Their own career advancement, the amount of money in their pocket, the amount of autonomy they have on a day-to-day basis, the work culture. Those are the things that they care about. But most of all, like people seeking jobs, it's sort of obvious, right? They care about the amount of money that you're paying them. So you're going to have to pay them more. Pay them more money. That's it. That's actually a great solution to why they should work for you. And it's not just that. You're going to have other things, and you have your own requirements, and you want to know they're a great fit, and they want to know they're a great fit, and you want to know that they're going to be doing the things that you want them to do, and they're going to be aligned with your purpose and aligned with your company's objectives, and they're going to want to know the same things. But essentially, at the end of the day, at the heart of it, one of the core reasons why someone goes to get a job is more money. They get paid in money. They don't get paid in satisfaction or vibes, right? Those are just cherries on top. It's like, oh, we have a great vibe. We can't pay you that much money. It's like saying, we have a great ice cream. There's no ice cream, actually. The amount of ice cream is very small, and it's not very delicious. It's kind of rancid. But we have great cherries on top of that. Would you want that? Of course not. It's a question of offering things that they actually care about. In this case, which is more money. In the case of startups, they're very ambitious. Then it's potential to make a lot more money a few years down the line. But at the end of the day, when it comes to jobs, it always comes down to money, right? So we're talking about show, don't tell. We're talking about answering these two questions, what and why, right? Answering these two questions. And this part is easy. How are you going to funnel people how are you going to bring people to the top of your funnel? That part is really easy. Nobody thinks it's hard. You can actually hire people for a very small amount of money, or you can contract agencies for a very small sum of money to do that for you, to run your ads for you, to craft your ads for you. What's really important is figuring out the message, the right message that allows you to scale. In fact, I like to say you're one message away from a massive campaign. Let that sink in. You're one message away from a massive campaign. One right message is all you need to take your business from being constrained by demand to being constrained by supply, which is a great problem to have. You can solve the supply constraints very easily, even if you run into those. A supply constraint would be, oh, I can't take on more customers. Well, you can. Just find another supplier, or hire more people. That's the easy part. And that's also a quality problem to have. Too much demand for your products and services, not enough ability to supply those products and services. That's a quality problem to have. No one complains about having that problem. The problem that most businesses have today is that they are demand constrained. Demand. That's your problem. Not enough demand. You don't have enough demand. And all I'm saying is you're one message away from finding a massive campaign that eliminates this demand issue, this demand constraint. But it comes back to that same old framework that I have. Hypothesize who your customers are, hypothesize what they want, and why they should care about it. Those are your hypotheses. Then test them using media. That's it. Small campaigns eventually lead to a much larger campaign, a scalable campaign that can take you from wherever you are to wherever you want to be. So that brings us to the close of today's discussion. I think we've raised some important questions about what it takes to scale from where you are, $1 million a year, $5 million a year, $10 million a year, to the next level, whatever that might be for you, 20, 50, $100 million. And the first thing to keep in mind is that your one thing is constantly shifting. Your bottleneck is constantly shifting. And just because you're at a certain level of success does not mean that the next level of success is going to be easier. It just means you're going to have to solve a different set of questions altogether. You're not going to be solving the same questions that you've always solved. That's the first thing. The second thing is, if you have a framework to answer two questions, one of which is very easy, how are you going to get people into your funnel? And that's the question of volume, right? How do you get your message across to lots of people? And right now, that's not really a big question. You can advertise, anyone can advertise. If you don't know how, you can find someone very cost effectively to advertise for you. The second question that really matters a lot more is who, what, and why. And this takes care of your market and your message, right? Why should they care about you? What's in it for me? If you can answer these two questions, you're in a great position, and you're in the position that you want to be in with respect to your marketing questions and scaling your business from where you are to where you're going to be. In the next session, we're going to talk more about what happens in today's FOMC meeting, how the interest rates are going to play out, or likely to play out. We don't have a crystal ball. I am happy to report I have never known anyone who had a crystal ball. So we don't know what's going to happen. We do know that it is likely, and the market is pricing these moves into its current pricing for everything right now, that we're going to see a 25 base point reduction in the interest rates, in the federal interest rates. So that's going to be great for your business, for my business, for all businesses, especially the ones that are well positioned to take advantage of it. And we're going to talk about how you can position your business even better to take advantage of it over the next couple of months, next season, let's call it season. We don't know how long this quantitative easing, if it begins this week, will last. But typically it does tend to last a long time, or at least for several months, and gives you a great opportunity to scale your business to the next level very quickly, very rapidly, with a certain set of moves that I like to call the little hinges that swing the big doors, or the one thing that you need to solve right now, as evidenced by you taking charge of your own time and your own efforts and figuring out what it is that I'm doing that I shouldn't be doing, but I'm spending an inordinate amount of time and money and energy and effort on it, that I could just relegate to spending just money on it instead of spending my time and attention and energy on it. My name is Behl. This is Behl's Business Broadcast, and I'll see you tomorrow for our live discussion. Now, if you have any questions, leave them in the comment section below. If you enjoyed this broadcast, share it with other people that you think might benefit from these messages. And of course, go ahead and subscribe. And I hope to see you tomorrow. Have a great day.